So what is the mortgage stress test and how it can impact your qualification? This simply means that you need to prove you can still afford payments if interest rates rise. This qualifying interest rate is typically higher than your actual rate in your mortgage contract. The current stress test rules require borrowers to prove they can either handle payment the minimum qualifying mortgage rate of 5.25% or their contract rate plus 2%, whichever is higher. You will need to pass this test every time you're applying for a new mortgage, refinancing your home, switching to a new lender, or taking out a home equity line of credit. By requiring buyers to qualify at a higher rate than they are actually being offered, the stress test makes it more difficult for Canadians to get a mortgage. It can reduce the mortgage amount you qualify for or require you to save more money for a larger down payment. The stress test tends to affect those who are just on the margins of qualifying, who are typically buying the most house that they can afford, and that's a lot of people. Taking an example, if you are taking a mortgage of $400,000, let's suppose the today's rate for 5-year fixed is 5%,